Hey everyone, welcome back to Corporate Decoder, where we take the corporate jargon and turn it into something you can actually understand. Today we're diving into a report from Safe and Green Development Corporation. You might be thinking, what is so exciting about a company's meeting? Well, sometimes the most interesting stories about a company's future are buried in how its shareholders vote. This filing is all about a special meeting held on the 8th of December 2025. It might sound dry, but it reveals some really important decisions made about the company's stock. Think of it as a shareholder showdown where key approvals were sought for future stock and warrant issuances. So, what exactly did the shareholders vote on? The first major proposal was about issuing a lot of new shares, specifically up to over 53 million common shares from the conversion of something called Series B preferred stock. Now, why is this important? This Series B stock was part of a private placement deal that happened back in October, when preferred stock converts into common stock. Especially if there are special conditions like price adjustments or make-whole provisions, it can significantly increase the number of shares out there. This is dilution. Folks, more shares floating around can mean each existing share represents a smaller piece of the company. The company is essentially saying they need shareholder approval to allow this conversion to happen, potentially because the conversion price might get adjusted downwards, and the shareholders overwhelmingly said yes to this potential dilution. We saw over 3.8 million for votes compared to only about 156,000 against. This tells us that despite the potential for dilution, the shareholders either trust the company's plan or see the value behind this Series B stock conversion. It is a clear signal of confidence, or at least acceptance of the company's strategy to leverage this preferred stock. Next up, proposal number 2. This one is about issuing even more common stock, this time up to over 37 million shares from the exercise of common warrants. These warrants were also issued as part of that same private placement offering. Warrants are essentially options to buy stock at a certain price. When holders exercise them, the company issues new shares, again leading to dilution. And again, the shareholders gave a strong thumbs up with nearly 3.81 million for votes to around 154,000 against. This is an even stronger showing of approval for this second proposal. It seems the shareholders are comfortable with the company issuing a substantial number of new shares through both preferred stock conversion and warrant exercises, which is quite telling about their outlook or the company's capital needs. Now, Proposal 3 is a bit of a safeguard. The shareholders approved the idea of adjourning the meeting if needed, to get more votes for Proposals 1 and 2. Think of it as a backup plan for the company. If they hadn't gotten enough votes, they could have postponed the decision. Thankfully, it looks like they didn't need to use this one because the first two proposals passed with flying colours. And the report is signed off by Nikolai Brun, the Chief Financial Officer, on the 8th of December 2025. This tells us the company is formally acknowledging these shareholder votes and the implications for their capital structure. So what is the big picture here? Safe and Green Development Corporation clearly navigated a critical juncture where they needed shareholder approval for significant stock issuances. The overwhelming yes votes on both proposals 1 and 2 suggest that the company is moving forward with its plans, likely related to funding growth or managing its financial obligations. The fact that they are issuing so many shares from both preferred stock conversions and warrant exercises indicates a proactive approach to capital management, which can be good for growth but also leads to dilution for existing shareholders. The key takeaway is that the shareholders have entrusted management with the decision to significantly expand the share count. This could point to exciting new projects or strategic moves on the horizon for Safe and Green Development Corporation, but it is also something existing shareholders should monitor closely as their ownership percentage might decrease. Alright, that is our breakdown of Safe and Green Development Corporation's special meeting. What is your take on these numbers and what they signal for the company's future? Hit that like button if you found this analysis helpful, and subscribe for more deep dives into corporate filings. Don't forget to join our Discord community for more discussions, linked in the description. Thanks for watching, see you next time.